Good morning. It's a nice day in lockdown Hawaii. We're absolutely locked down because of COVID, but our office is still on a split shift basis. We're manning the docks, if you will, because the market keeps coming in. We closed at 29,100 today after a very broad advance of close to 500 points. All I can tell you is that after 52 years on Wall Street, I can say I have never witnessed this before, this broad an advance. What does it mean? Probably means a lot of things. Also in the headlines today, some large growth funds, Vanguard being one of the premier ones, have had outflows, people getting dizzy from the heights, bailing out of these funds. But it probably means that they will bail back in next week because they're missing one heck of a ride. So what do we do with this thing? What does it really mean? Can't be sure what it means. Let's look at all the foggy items out there. One is the election. News now on Wall Street is that we will not have a winner on November 3rd because of the mail-in. It's apt to be contested for months. That's certainly not good for the country, but the dollar's strong today, the market's strong. You tell me. Our technical disciplines, meaning the study of the market itself and the supply and demand for stocks and money flows in the market, is the technical side of the picture, and that's keeping us in. If the market wants to go straight up to 5,000 or 50,000, I should say, so be it. We'll probably take that ride. So in essence, what's happening is the market is beginning to lead us because the normal fundamental disciplines of price-earnings ratios, economic strength, yada, da, da, does not connect with what's happening. Yes, we're looking at a 20%, 25% economic growth quarter to quarter, but we're coming out of a very deep ditch. So even with that kind of growth in the third, fourth quarter, we're still looking at maybe a down economic year of 4 or 5%. So that's not in the cards with this. Corporate earnings, not in the cards, but the market keeps going up. I have to believe that the severe accommodation by the Federal Reserve, buying every bond that looks like it's going to default, buying every note that looks like it's going to go belly up, has something to do with it. They're pouring money in and keeping interest rates by virtue of this very, very low. So now people can afford to get a mortgage at 2-3%, where they couldn't get it at 6 and 8. And there is a move into suburbia, away from the cities, and understandably so. You know, cities are becoming centers for murders around the country. So people want a grassy yard. They want kids to play in a neighborhood. So new home sales are really rocketing because money's cheap. Money's everywhere, and so I have to believe that the market is responding simply because of the printing of the money. And this cannot go on forever. Ask any banana republic, how it went. So we seem to be going down the same roads. We're going to keep a very close watch and a conservative one. We still have cash, but we're looking at lesser known names. We're looking at the names that haven't responded well in this environment. And even banks are up today. Defense stocks, which have been hurting because the polls say Donald Trump's not going to get elected. They came alive today. Just can't tell, but we're looking for those names that money will be attracted to that are still reasonable. They're harder to find, and we're going to be slow and very deliberate to buy. You know us, but so far so good. Just trying to give you the background on what's going on here. Thank you.